Look at your financial statements and be able to tell a story.
So let me introduce you briefly to Nelly. Nelly, along with her brothers, opened their own company, Sfeir Associates.
Thank you for the introduction. What we're going to talk about today is how to write up a business plan and a little bit about budgeting. And one important question to ask yourself as well is, why are you doing this business plan? Do you need funds? Are you pitching for investors? Do you need to take it to the bank to get a loan? And this affects how you're going to write it up. A very simple structure of a business plan, it would look like this. You would have your executive summary. Your first section is your market analysis. And you need to invest time doing that because it shouldn't be, okay, this is the market, I'm going to sell this product, those are my competitors, etc. If you cannot do it yourself, you can commission a market research agency to do it for you. What is your plan here? How is your company going to be structured? What timeline are we talking about? So all this has to be put in your plan. So the first thing I need to do is to know exactly what I am offering, okay? What am I going to sell? From this market research that I have done, you need to have a certain understanding of the market and you need to have a target which you will adjust for probability down the line. What they think their business drivers are, this is something that you know. I mean, you know the details of your business. So you need to put in those numbers for your first year of operations. And the next step is to plan a certain growth. Now, the next step is to price all those. So number of tickets, how much am I selling the ticket? Store customers, how much on average is every customer spending in my shop? This is how you would start to put the assumptions in order to come up with your revenue stream. Running costs. Your first categories is all those sunk costs that you're going to incur at the beginning. The second type of cost is whatever regular resources you're going to need to run this business. Now, usually to go forward with my prices, I would look at inflation because this is usually what drives my costs higher every year. The last part is my investments. Do I need to buy a location? If I'm opening a coffee shop or a bakery, I need to invest in furniture, decoration, branding. All this goes into my investment box. If I want to summarize it in one graph, I would look at it this way. I've done my market research. I know my drivers. I'm able to know what my revenues are. I've identified and quantified my resources. I know what my startup and running costs are, and all this is going to translate into my income statements. Now, from my income statement, I need to move to something that is my cash flows. Whatever capital expenditure or initial investment I'm going to put in, machinery, furniture, etc. I need to look at my contractual terms because this is going to affect my working capital. So the faster I collect my receivable and the slower I pay my suppliers, this helps my cash flows, okay? This helps me because I will not need to go to the bank and tell them, please, I have a shortage. I need to pay my suppliers, but I haven't collected from my customers yet, or I have a lot of goods that are sitting in my stock that I haven't sold yet. So this is where you need to try to optimize your cash flows by knowing how to manage your working capital. Key performance indicators you need to look at, your KPIs. Now, very general ones are your revenue growth, gross margin, EBITDA percentage, net income percentage. Those are percentages that you want to put in at the bottom of every income statement that you prepare. And it's important here, whenever you're looking at KPIs, have a certain benchmark. So it doesn't help to have those numbers and just to look at them. I need to compare them to something. So what you need to be able to achieve is to look at your financial statements and be able, through those financial statements, to tell a story, okay? Like to look at the numbers and say, okay, here I have an improvement in the sales of this store because this has happened. This product was loss-making during this month because we had this problem. So you should be able to rationalize your numbers whenever you look at them.